Welcome everybody to our year-end tax series webinars. Today we're going to be talking about retirement plans and retirement income limits. This is one of our topics that we've put together for year-end planning items. Today I'm joined with Andrew Cook. Andrew, if you don't mind, can you just introduce yourself and give us a little bit about what you do at the firm?
Yeah. I'm a certified financial planner, and a lot of the work we do is helping individuals manage and prepare for retirement. In addition, I have an accredited investment fiduciary designation, which is really specific to the 401k retirement plan industry. And so I head up our advisory group, in regards to retirement plans for corporations as well. So,
cool. Just to get started, let's start super basic and high level. Let's just talk about the differences between a 401k or like a workplace plan, and then what people may think of as a traditional IRA or Roth IRA.
Yeah. So first of all, I'll say you've got to have earned income to be able to contribute to any of these types of plans, or be married and have spousal income. But your employer is going to be able to offer a 401k or a simple something like that, and generally those are going to have higher limits, a little bit more bells and whistles, and maybe some kind of company contribution. The individual IRA or Roth have a much lower limit, and those sometimes can be impacted by your income or what access to other plans you have. So,
I know one of the big changes for 25 is something to do with the catch-up limit. Can you describe what that is and how it's changing?
Yeah, so the new limits just came out for 2025. The 401k deferral limit only went up $500. It's based off of inflation type numbers, so we didn't see a big increase. But there's an interesting new provision for folks that are turning 60, 61, 62, or 63, and they can do an extra $37.50 catch-up amount. So again, don't know why those specific ages, but that does allow them to do an additional amount over the normal $7,500 catch-up at age 50. So that's something for folks to be mindful of.
New in 25.
Yeah.
Let's go in just a little bit into the tax difference between what people would think of as their traditional IRA or maybe pre-tax 401k and then the Roth option. What's the fundamental difference there?
So with the traditional or pre-tax IRA, you're getting the tax benefit in the year that you make your contribution. So generally, if you're a higher wage earner, higher tax bracket, getting that tax deduction now is very, very helpful and valuable to your current income taxes. When that money gets pulled out later on in retirement, you do have to pay taxes on it. But hopefully, when you're retired, you're in a lower tax bracket. The Roth is where you put money in after tax, and so you don't get any tax break on the year you make it, but it grows tax deferred, and you don't have to pay any taxes when the money comes out. So generally, we like to defer taxes if we can, unless we can pay them at a rate lower than we'll ever be able to pay them again in our lifetime. So that's one of the things that we help people look at and kind of consider, which makes the most sense in their situation.
Let's get into like one nuanced rule I think people get tripped up by, and what are the IRA income limits and how do they apply to situations?
So if you do not have access to a 401k, you can make an IRA contribution at any limit. The issue being is if you have access to a retirement plan, they set an income limit on whether or not you can also do an IRA. So if you're a high income earner, you may only be able to use your company plan. If your spouse has access to a plan but you do not, those income levels are higher. So it's one of those things where if you or your spouse have access and are also a high wage earner, you really need to look closely or seek advice on whether or not you can do both. If you can't, again, the limits are much higher in your employer-sponsored plans, and that's probably where I'd start funding.
Awesome. So as we're approaching the year end, when you're thinking about calendar year ends and things that you need to be doing to fund these, what are the rules surrounding when they got to be funded? What needs to be done maybe before December 31st? What can you do maybe a little bit into next year?
So thankfully, you actually can fund most retirement plans up until your tax filing in the spring. The one exception is if you're an employee of 401k or simple, those have to be tax year deductions. So if you're wanting to max out or do your contributions for 2024, those do need to be made by 12/31. But if you find out and you have some excess ability, you need a tax deferral, you may still be eligible for IRA contributions in the spring. Again, we got to go back and look at those limit rules that we just talked about to see if that's something you're eligible for.
When it comes to required minimum distributions, I think we use RMDs a lot as an abbreviation. Those generally need to be done before year end, but what is one strategy that people can use if they're charitably inclined to fulfill those requirements?
Yeah, so the RMD age has actually gotten moved a couple times in the last several years, and so if you haven't already started taking, that age is now 73. But starting at 7.5, with this age has not changed, you can actually do something called a qualified charitable distribution, meaning that you can make a gift directly to a charity. The new number is up to $105,000, and not only do you not have to pay tax, the charity doesn't have to pay tax. So for folks that are charitably inclined, that is the most efficient way to make gifts. When you get to RMD age, that also can satisfy your RMD. So if you're in a situation where you're able to make those kind of gifts or don't need to take that and claim it as income on your tax return, that's a very, very efficient way to give.
Awesome. Well, thank you for those. A lot of the contribution limits and the income limits that we referred to will be in an article that we're going to release. You can find it on our website at hhmcpas.com. And then if you have any more specific questions or need help with anything, you can reach out. There's a contact us place on the website.